Silver investors. The price action looks boring, but the money flows are screaming a completely different story. Today, we're going to look at where real capital is moving right now, and it does not match what the headlines are telling you. I'm OG John AG, and the title says it all. Just in, silver investors. You need to see what the money flows expose today, system stressed. If you only stare at candles, you'll miss this. If you watch the flows, you'll understand why the system is more stressed and more fragile than it looks. Segment 1. Price says sleep. Money says wake up. Let's start with the surface. If you open a basic price chart of silver recently, the story looks like this. Silver pulled back after the latest spike. Intraday moves look choppy, up 1%, down 2% sideways for hours. Most retail traders are saying, silver is dead, nothing's happening, let's look at something else. But behind that boring chart, money is moving. Physical-backed silver products are quietly seeing new creations. That means big buyers are asking for exposure, and new shares are being issued to meet demand. On certain days, you'll see tens of thousands of new silver ETC or ETF units created, which translates into real silver exposure being added in the background. So while retail is scrolling TikTok saying, silver's boring, larger capital is literally voting with dollars, and that vote is pro-silver exposure. That disconnect is your first signal that price alone is not telling the full story. Segment 2, what ETF, ETC creations actually mean. Let's break this down in simple language, because this is the core of today's money flow signal. When you see a headline like, iShares Physical Silver ETC issued new securities, what does that actually mean? Step by step, big investors, institutions, funds, large traders want more silver exposure. They go to an authorized participant, usually a large bank or market maker, and request new units of that silver product. To create those new units, the product provider must either acquire additional silver, directly or via prearranged metal, or hedge appropriately in the futures market to match the exposure. In plain English, creation's up, whereas some fresh money flowing into silver exposure. Redemption's up, money flowing out of silver exposure. So when we see new issuance in a physical-backed silver ETC recently, today it's a clear signal that someone with size is not done with silver. They are using this boring or weak price window to quietly increase their position. Retail watches price. Big money watches value and liquidity windows. Segment 3. Why this matters more after your last video. If you've been following my channel, you know the last viral video was about rate signals flipping. The Fed being trapped between inflation and an exploding debt load. The bond market hinting that higher for longer won't last forever. So think about the sequence. Rate and bond signals suggest the Fed is slowly losing room to maneuver. The macro backdrop looks more fragile than the headlines admit. Now, on top of that, we see fresh inflows into physical-backed silver products, right when most retail thinks the party is over. That combination is powerful. Macro stress building in the background, policy options shrinking, and money quietly moving into the one asset class that benefits when confidence in fiat and bonds cracks. Precious metals. This is why today's money flow signal matters more. It's not happening in isolation. It's happening on top of a Fed that's already in a corner. Segment 4. System stressed. What the flows are actually telling you. Let's talk about the system stressed part of the title. Money flows into silver are not happening because everything is calm and perfect. They're happening because larger players are worried about several things at the same time. Government debt levels that keep climbing. The cost of servicing that debt at higher interest rates, corporate balance sheets stretched with refinancing risk, households under pressure from inflation that never truly reversed, only slowed, a central bank that can't fight all fires at once. In that kind of environment, some capital says, I don't want to hold just bonds and stocks. They start quietly shifting slices of their portfolio into real assets, gold, silver, maybe some commodities. The important word is quietly. These allocations don't usually show up as screaming front-page news. They show up as ETF creations, ETC issuance, and steady accumulation. Exactly the type of flow we're talking about today. This isn't TikTok money. This is, I want to survive a policy mistake, money. Segment 5. Why retail and big money see this differently. Retail behavior right now, obsessed with short-term price moves. If silver doesn't explode in a week, they call it dead. Jump from asset to asset chasing the latest spike. Big money behavior looks at multi-year macro trends, asks, where is the purchasing power risk? Uses down days and flat periods to build positions quietly, not chase euphoric candles. So when you see price sagging or chopping, retail sentiment turning negative, comments like, silver is a dead trade. At the same time, data showing fresh silver ETC, ETF creations, more physical-backed units issued. You're looking at a classic inversion, public boredom versus institutional accumulation. As an investor, you have a choice. Trade like the comment section, or think like the flows. Segment 6. how this ties back into Fed, debt, and inflation. Now let's connect today's flows back to the bigger macro story. The Fed is trying to signal it will keep rates high enough to keep inflation under control, very aware that high rates are crushing debt sustainability over time, stuck between credibility on inflation and stability in credit markets. At the same time, inflation came down from the peak, but prices didn't go back to old levels. The cost of living for the average person is permanently higher. Governments are still running deficits, which means future debt must be financed or monetized. It doesn't matter whether you're bullish or bearish short-term on silver. From a multi-year perspective, the combination of sticky higher prices, structural deficits, a trapped central bank, and growing skepticism about fiat money makes it rational for serious capital to own some allocation in precious metals, especially at points where the market is looking the wrong way. That's exactly what these money flows are hinting. We see the same system you see. We just don't trust it as much anymore. Segment 7. Not all flows are equal. What to watch. To use money flows intelligently, you need to know what to watch, things that matter. Creations versus redemptions in major silver ETFs, or ETCs. Are more units being created than redeemed over weeks? That suggests net inflows, more money coming in than going out. Volume spikes on inflow days. Large block trades in silver products often reflect institutional rebalancing, price behavior versus flow behavior. If price is flat or weak but flows are positive, accumulation. If price is surging but flows are negative, people cashing out. Distribution, exit liquidity. Cross-asset flows. Are we seeing outflows from bond funds or certain equity sectors while metals and commodity funds quietly pick up interest? That rotation is part of the system-stressed story, today's key idea. You're not just watching silver's candle, you're watching who is getting in or out and at what time. Segment 8, how a serious silver investor uses this information. Let's turn this into something practical for you. What should a serious silver investor do with money flows exposed today? You don't FOMO in because one product added units. Instead, you align your time frame. Are you thinking 2 weeks, 2 months, or 2 to 5 years? Money flows like these matter most on months and years, not intraday. Use dips, don't fear them. If you believe the macro story, Fed trapped, debt unsustainable, inflation risk persistent, then price weakness during net inflow periods is an opportunity to scale in, not an invitation to rage quit. Avoid overleveraged smart money, flows into physical-backed products and unlevered exposure. Retail blows up on options and CFDs when silver's volatility spikes. If you want to stay in the game long enough to benefit from the macro move, you cannot be over-leveraged in a metal this violent. Diversify within the silver theme, some physical, some ETF, ETC exposure. Maybe selective miners if you know what you're doing. Don't put everything into one high-risk instrument and call that a plan. You're playing a macro endgame, not a lottery ticket. Segment 9, where this could lead if the system stress escalates. Let's look down the road a bit. If current trends continue, government debt will keep growing. The cost to service that debt at any non-zero rate will become heavier. At some point, the Fed will be forced to choose. Protect the bond market and the government's ability to finance itself, or protect the currency's purchasing power. History suggests most systems choose to protect the debt machine, not savers. That usually means easier money again, more liquidity, more financial repression. In that regime, nominal asset prices, including gold and silver, reprice higher to reflect weaker money. If that's the path we're on, then today's quiet money flows into silver are not random. They are the early positioning of people who don't want to be the last ones out of pure paper promises. Will it be smooth? No. Will there be drawdowns? Yes. But the direction of trust is what matters. And right now, trust is leaking out of the system and into hard assets. Segment 10, closing. Don't just watch price, watch flows. So here's the real message of today's video. Price told you, nothing to see here. Money flows told you, someone with size disagrees. The system is stressed, debt up, real rates volatile, central bank credibility questioned, cost of living structurally higher, and quietly in the background, products that give exposure to physical silver are seeing fresh demand. You can ignore that, or you can use it. You've been watching John AG here, and I'm OG John AG. If seeing the flows behind the price helped you think differently about silver, hit like so this kind of content doesn't get buried under hype. Smash subscribe and turn on all notifications, especially if you've already watched the rate signals flipped, Fed trapped video, because this is the next piece of that puzzle. And drop a comment, price or flows. Tell me which one you've been watching more, and after today, which one you trust more. Because on this channel, we don't just watch charts, we follow the money.